Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market had a roller coaster week as the markets moved up strongly through Wednesday, and then Thursday and Friday gave it all back. Focus was on the reopening of the economy, whenever that could happen, and earnings, which overall are pretty mixed. Monday, we saw Japan stimulus lift equities as they talk about yields staying at zero and unlimited QE. Just a lot of jawboning out of Japan. They don't have anywhere near the room to do that anymore of any other countries. They were already buying up all their stocks and everything else there, and their QE has been relatively low versus other countries over these last months. So they're just trying to do everything they can to lift up their market and their economy, which is getting creamed by coronavirus like everybody else. Oil that day on Monday was down another 18%, but that didn't stop the stock market. They were excited, and S&Ps jumped about 40 points. It was a good day for the markets on Monday. Tuesday, early gains failed as techs, which had gotten bid up so high, reversed, and the market ended up the day mixed. Wednesday, Google earnings had come out the night before, and that lifted stocks overnight. And there were some modest gains pre-opening, but just before the opening, news came out from Gilead that there was a favorable report on the trial with remdesivir, and the S&P 500 pre-opening moved up 80 points. It was wild buying going on as everybody was excited about the prospect of shortening the term of the COVID-19 disease, easing that up. But later on, it turns out that there was some disappointment about that also, because what the trial really had said was that about 30% of the patients had a shortened or less intense period of the disease. And while that is really great news overall, it's certainly not any kind of a magic bullet cure. And this is for the patients that were pretty severe. So it was actually good news, but not the kind of news to give the kind of lift to the market that we saw. Then on Wednesday also, the FOMC came out, and that brought more buying in, as what they said reinforced their QE infinity. Holding policy, as they were, zero interest rate policy, which may become negative interest rate policy. ZERP to NERP, that may be coming. They're saying that they will need more stimulus. They say committed to a full range of tools in this challenging time. That means they're going to buy everything, including the illegal action of buying junk bonds. Yes, it's not legal because they're really only supposed to buy government agency type bonds, type of securities, and they're not supposed to buy anything that imposes any risk to the public or the taxpayer. Well, they're using a little trick there because essentially they're saying, well, they're going to use the government, the Federal Reserve, to back that. So if they can back it, then it's legal for them to do it. If they use that same little illegal trick, then they could buy stocks too. They could do anything they can. They say they're going to do that until they can, quote, weather the storm. And then, of course, when the storm is weathered and then they get past this, well, then, they have a chance to reverse it. No way. Never. They're never going to reverse it. Just like 2008-9, when Bernanke was doing the same thing, and just a temporary, it's not really monetizing the debt. Well, all of that is still on the balance sheet. They're never going to reverse. And that is just a lie that they impose out there because they have killed this economy and it is now purely contaminated. Oil moves up 25% on Wednesday, also in what is now a giant rebound because Thursday, oil jumps again. A record 75% gain in oil over 3 days. The Eurozone news came out. They contracted on Thursday 3.8%. That is a record decline based on all of their records for a quarter. And we also got our initial claims for unemployment on Thursday. That was a 3.8 million more, which brings it to 30 million over 5 weeks. You know, when you do the calculation, I've read a few articles on this. It talks about, the unemployment rate being somewhere over 18%, maybe 20, maybe even more. Those are depression numbers where we are right now. And Fed Kaplan comes out and he says, well, the unemployment rate will probably be 8 to 10% at the end of 2020. That just shows you how far out in left field that these guys are, that they don't even see the real numbers in here. Consumer spending plunged worse than 40 years, 7.3% to the downside. And the S&P 500 moved down about 30 points. Friday was a lot worse, however. There's a lot of news here as Amazon and Apple reported earnings, and Apple's earnings, I'll show you that a little later in the show. They weren't actually all that bad. Amazon's, well, they were bad, and I will show you that chart. The indexes fell overnight very significantly, like 70 points in the S&Ps. They're now down over 80 at midday, and the NASDAQ down about 250 overnight. That's where it sits right now based on these big moves. The UK, the PMI crashed there. It was a horrible number, and London's got huge COVID problems also. And Amazon's Bezos was summoned to Congress. They sell to subpoena him if he doesn't come. Stock is down 200 on their big miss in earnings. And there are a lot more reasons for that. They say that Amazon's practices may be deceptive. And then the president came out and had harsh language for China, all about whether or not this COVID-19 came out of one of their laboratories in Wuhan, and now has threatened to restart the trade war. So unbelievable stuff going on here in the background here on Friday. So Thursday and Friday give up these big gains from early week. It seems investors, they're getting in touch with the reality as the index has moved up to what we had as a big resistance level, with earnings prospects collapsing. The market did regain 2/3 of its losses, and at that valuation, based on what earnings projections look like, the market was actually higher priced than it was at the top, if you compare that to earnings. Now, the economic restart is in view, supposedly, as everybody's looking past the darkness in here into when the economies get to start up again. The question is, what is the new reality? What kind of a world are we going to live in? When the economy is a result of the Fed funny money being splashed everywhere, they're never going to let us find out what an uncontaminated economy would look like. Everything about this economy right now is about where the Fed is putting the money. All the earnings, all those surviving companies who the Fed decides who should live, so many of those are zombie companies that should absolutely be gone. We had a lot of those in 2008-9. But this Federal Reserve and this government never learns. And they're not going to let that happen now either. They're just going to print money until the money has so little value that we all pay for it in one way or another. Investors, they're getting the picture now. And there are, in my opinion, years ahead of pain. This isn't going to be over just because they say, well, the COVID-19 virus is under control. This is a long time of healing out of here, and the more the government does this garbage that they do, the longer this is going to take. All these analysts out there talking about Dow 3000, 30,000, sorry. That's a fantasy. 30,000, that's a fantasy. I think that Dow 15,000 makes a lot more sense than Dow 25,000, where we were just at. And 50% down from the top, well, that would be what 15,000 is on the Dow. Well, that's like most of the other bear markets that we've had out here in all of these decades going back to the post-war period. There's nothing that strange about a 20% bear market, 50% bear market. It is strange to get a 20% bear market, and it's not strange to get a 50% bear market. That's like the bears of the past, and that's what I think we're in right now. Stocks for the week, really narrowly mixed. They gave up those big gains. The best index for the week, overperforming, is the Russell, but that is having a pretty bad day today. So what was a good relative strength seems to be now lost. Bond market, 30 years, down fractionally, about a half to 3/4 of a point. The 10-year yields, they're gained about 4 basis points to 63 basis points. Gold loses about $45. It was worse. It was better. It's been trending down into this corrective period that we're looking for. The dollar 5 for 5 to the downside, about 1.3%. And the oil market gaining just over $1 after having a huge decline on Monday, but then had 4 days of recovery. So that was a very, very good period of rebound that we've had in here, as the oil market had succumbed all the way down below $7 and then moved up over 20. So that was a pretty good return. And I will show you that in the short-term view coming up. Make sure that you follow us on YouTube. Like this video, then give us a thumbs up. For YouTube, you would become a subscriber, and you could set up the notices so you know when we post videos. So when you subscribe it, then you can share it and show everybody all the great educational things that we bring to you and all of the analysis that we do. And follow us on Twitter at askSlim. For trial memberships, you can write Matt at askSlim.com. One more thing I want to show you in here is that we're holding this over by popular demand. Our cycle analysis workshop, this is an amazing thing. If you have watched and studied the kind of analysis that I do, you will learn in this workshop my style of analysis developed over 43 years. It took 2 years to write this workshop and over 6 months to produce. There are 20 video modules. The depth of this is unbelievable, where I cover so many things about analysis. It's supported also by many of our Tech Tools videos with links to that. So you'll watch 35, 40 videos in here, and you're going to come to the other side of this in a way that you will never look at charts the same as before. So go to askSlim.com, go to the workshop on the top nav bar for info. You'll see that. And then I want you to write to Matt, because we have a new demo reel that was prepared by our guys here. And it's clips of most of the videos that I do in the workshop. It's going to give you a much deeper sense of the kind of things that we're going to be showing you and teaching you in there. And this is the kind of workshop that is transformational, really. You are going to have more information and up your skills in analysis, technical analysis, like you really never thought you could. Like I said, we've held this over by demand. Demand's been really strong since we're running this 30% discount during this period where there is a crisis world out there and people staying home. That's why we did that, and the amount of people that have signed on to this have been just amazing. Write Matt at askSlim.com. Tell him you're interested in it. You want to see that new demo reel, and he'll send that to you, and he's going to send you a link for that 30% off. And watch the demo reel. See if you're interested. Go to the site. Look at that workshop information on that page. And then if you have questions, you can write Matt at askSlim.com. He's got lots to show you on that. All right, so now what we're going to do is get into the best and the worst stocks for the week. We look at weekly charts right now. When we do this, the core of our work is done on weekly charts. In our focus list of the best traded 84 symbols, we also look at at the daily charts, and even a lot of them at the intraday charts. So we have all of that available for our level 4 members. And let's take a look here as we switch over and I show you Fluor. So Fluor is the best stock for the week, up about 20%. Well, look at that chart. It's actually given some back here so it's not up 20% now, more like about 15. And you could see how bad that is and how little move it takes to get that kind of a result. I want you to notice the cyclical analysis that's in here. This is a cycle bracket, and what that does is it just gives us a guide to the energetic rhythms in here. These sell zones are a result of what we call swing high, swing low analysis. There are videos about that in the cycle analysis workshop. And it sets up the sell zones or resistance zones. You can see that and how that worked. And this one over here, it couldn't really get much into it, just into that real lower resistance area. And then we set up this fib target over here, and look at it, just nailed it, just perfectly. Got this big rally in here, moves from $2.85 all the way up here to about $12. Talk about a move on the upside, but then it's at the sell zone again, and you can see it resisting in there. They had a lot of corporate news that had come out in here, and that's why the stock got a good rally. They have disclosed that they have not drawn any money from their credit facility yet at this point. They're reducing costs, and they have enough liquidity, they said. They are suspending their dividend, and they are pursuing divesting their equipment and rental company. So a lot of news came out on this. It gave it a lift. And you can see in here that it doesn't really have a lot to go. Big gainer for the week, the biggest gainer, but that's just a rebound on a stock that has been destroyed, going all the way from the mid-40s to under $3. We're going to look at the cruise lines in here, CCL, and this one you can see a similar thing going on in here. Again, all of these cycles trending down. You can see that. The word swamped means that the downward component in here, the energy pushing down, was so strong that this rising phase could not give you any rally, and it continued down right into this low period. This one ran a little bit long because there was so much selling, and then the rebound. You can see the lower sell zone. Carnival Cruise Line, this is a company in massive trouble. The cruise lines are in massive trouble. I don't care if they get some bailout or borrow some money. I mean, it's going to be a long time before they can sell cabins, rent out cabins without giving them away. They're going to lose billions and billions of dollars, and even after they get started up again. Carnival, you can see it's given up all that ground. I would not buy it. Bargain hunting coming in. And they say they're selling bookings for 2020 and 2021. Good luck. I mean, they're just going to be giving away stuff. This went up about 20% in the week now, maybe a little less because these things are giving ground back. Royal Caribbean up about 15% on the week, RCL, and they're all in horrible patterns. Oil stocks also got a big rebound because oil exploded to the upside, doubling. I mean, it was a huge rebound in there. Oil's not done with this period of panic in here, but there is some relief going on right now. Here is Marathon MRO. Now, what are all these blocks, colored blocks you see in here? What they show are the rising and corrective and negative phases, as we call them. The rising phase is green, the yellow phase is corrective. The green phase, positive, you can see there, and then it breaks down under this level. It stays red through the whole time period in here. Now there's a bigger cycle in here also that is also at play. And now you see that it made the lows right over here. See the XLE, that's the blue one, and the MRO is the black one here. It makes its bottom and then rallies, so it's in this rising phase still. It could still make a little bit of ground, up about 16% on the week. And this is just a modest rising phase in a very, very horrible period in here. You know, I'm not even showing you Exxon. They reported record loss. And this is not a great period for oils. I'll show you one more oil in here. Occidental gains about 15%, OXY, and you can see a very similar occurrence in here. All these stair-step downward cycles. And this low that comes right in here, and then the rally into the lower part of the sell zone right in here, and it is another stock in a lot of trouble. We think the stock is going back under $10. You could see that projection out here at the end of the summer or early fall. This is not a good pattern in here whatsoever, and we would just say that you pop up over, close to that, $18 to $20 area. That is really a sell. Halliburton gains about 14%, APA about 14%. Marathon Petroleum gains about 12%, Valero about 10%. All of these move up into these lower resistance areas. All of them look like they have a little bit more upside, but I'm not really excited about this group at all. Now, Apple gains on the week. It was up about 5% at best levels. Now it's given some of that up. It's up about 3% right now. And you can see this pattern in here. So Apple is a little bit different than some of the real negative stocks we've seen, because this right over here is a monstrous move, and it gives up past the 78.6%. So when a stock is bullish, and you can see in here there are actually minor thirds, so these are called harmonic families. You learn about that in the cycle analysis workshop also. And now we're peaking in this first minor third. You can see that. And because breaking this 78.6%, the probability was high. It would reverse under the 61.8. That's where I'm pointing at right now. But it actually got up close to the 78.6. It's not that unusual, however. It's not the highest probability. The probability was that it would stop short of that. Earnings in here came out, well, not bad. I mean, the numbers were really okay. Maybe better than people expected based on the effects of the coronavirus on most other companies. This stock, many analysts were raising their targets on it. The stock tried to rally again today, but then ticked back down. It's not down much, a little over 1% right now on the day, and gains on the week. You can see that we do not believe this is going past the 78.6%. So the first minor third right over here could easily get you down here to about 265. That would be sometime in late May or early June. So that's kind of our initial target. Then we want to see what kind of a rally this brings us right in here. So we think Apple is done for now in this upside move. Their revenues year over year actually fell. These analysts, they really want to be bullish, but not me. I mean, I really think that the stock is destined for a much bigger decline. And when you look at the dates right over here, this big cycle that you see right there takes you out to November. I think by that time the stock is going to be pushing this low closer to 220 than it is up here close to 320. And I'll bet you I get a lot of people that argue that with me in here in Apple. All right, so that is it, and that's all about the weakness that I see in the economy moving forward that I think is going to be severe. So that's the best of the week, and now we'll take a look at the worst. The worst stock in my 300-something universe of stocks that I look at was Lam Research. This is so cool. Now remember, I told you that usually when you have this kind of negative pattern in here, that this is far worse than Apple, that when it rallies up between the 50 and the 61.8. And you see it did that exactly, and then moves down very, very sharply in here. Earnings missed, analysts downgrading the stock. The support levels are right over here around 228, 218. And that actually looks like it's going to get there and possibly worse. This area over here around 180, well, it's a high probability that's going to get tested out at the bottom of these next cycles, and they're going to be nesting in here. So this one over here, I'm just going to show you the dates right here. This one points to October 25th as the date that the next major sell-off would likely end. This one also October 25th, so there's a nesting out here. So what does that mean, nesting? It means that usually when you're in the area of where two cycles come down together, you get big declines, like here and like here. This one, only a modest decline. This one was from 285 down to about 255, 30 points only, because it was such a bullish cycle in here. But this one's very bearish, and this one points to much lower prices coming. Lam Research, I'm a seller in here, 13% down on the week or more now, and that one, if it gives a pop, I think you expect another drop. AMD is the next one we're going to look at, and this stock, this is really cool, and you can see in here it makes a double top and gives you that evening star pattern. That is almost perfect cyclicality that you can see in here. These, again, harmonic families, each of these dominant cycles made up by two small ones. You can see the clarity in there as they're mapped out here. This one points to a decline out to late May or early June. It's probably going to get down closer to here. We'll call it under 45, or maybe down here to under 42. As this stock looks like it's got problems in here right now. The earnings in line, but they cut their outlook, and the analysts, they're pretty mixed on this. Well, I'm not mixed. I think it's going lower, and I think that double top is the highest you're going to see. We have downgraded this right now. As of today, we had projected it getting up to the fib target zone right over here, but now, based on this action, that's out. So we think that the direction for this stock is going to be down. Let's stay in this semiconductor category, but we're going to jump into semiconductor materials, applied materials, and here is another perfect example. Look at the uptrend. So this uptrend that you see in there is so clear. We call this the dominant directional component. These are the ideal cycles. So the principle of summation, and this is something out of the cycle analysis workshop, says that when you add this energy to these energies, it gives you this upward trend. You can see that perfectly. But then if it violates that low, it's negative. And because you see that, you get the swing high, swing low resistance area, and there's your evening star pattern right over there in the sell zone, and that's likely coming down. Best case is 43, could be a lot worse than this, and probabilities are pretty good. It's 36. So this stock, we believe, a lot of trouble in here in the semiconductor equipment area, down 10% on the week. KLA 10 car in the same group, down about 8-9% on the week. And that's after a big upside move. The earnings on this one in AMAT are on the 14th of May. KLA 10 core are on the 5th of May, and we think they both have topped right now. KLA 10 core got a much bigger upside move than Applied Materials did. We think it's going to be down. UPS has been a disaster, and it looks like more of a disaster in here. The stock goes from 125 to 82, then has a bounce. Guess where? Right, nails the 50% right in here in the swing high, swing low analysis, and has this big hit. Earnings miss, analysts downgrading the stock. The sell zone in here, absolutely fantastic. The probabilities of getting back to 82 over here in late summer are very high. And you can see our projections out over here that we have thought the stock is going lower. So now let's talk about Amazon, AMZN. Here is a very, very good looking top in here. First, you could see the broadening pattern, or that megaphone being formed. It gets up to the 100% fib extension. That 100% fib extension comes off of this last cycle right in here. So what we do is we build that off of this big cycle here, and it projects to this level here. That's in some hindsight. I didn't really project for it to get up there. It's just that the patterns do project that that would be a good place for it to stop and roll over. These were a big earnings miss. I mean, they really have issues in here. And the cost of getting set up to be the provider of food and everything else for this stay-at-home world, well, this was the star, right? They were doing the best of everybody. But their costs, in order to change their model to be able to accommodate that, were massive. And they're talking about the cost being even bigger in Q2. So $4 billion in additional costs that they believe that they're going to face between who they have to hire, how they have to run these distribution centers. It's an enormous cost. And the stock, in our opinion, is going lower. We're going to project it at a best case in the near term here down to about 2150. but it could be a lot worse than that. They're going to be anticipating really bad earnings numbers. As a matter of fact, they could earn nothing in the next quarter based on what they have to do to run their business. They're really suggesting that they're having those troubles. And then, of course, with Bezos getting called in front of Congress, the stock is down 200 points today, 7.7%. It's a bad day. This is a weekly chart you're looking at, and it's going to be a bad quarter out there. We think the top is in on this stock and that it is a short. That is the best and worst stocks for the week. I hope there was some great analysis in there for you, of course. That all comes off of our cycle work, and you can learn about that by taking our cycle analysis workshop. I'm going to tell you a little bit more right in here, but what I'm going to show you is something new. We're going to do a little piece here on trader education, on gap reverse or invisible gaps. These are really great patterns when you catch them. We look at cycle analysis, but we're always looking at indicators that can help us find the cycle peaks and cycle troughs. And gap reverse are just an absolute great way to see that. So let's take a look here as we look at this Amazon chart. I'm going to move out of Amazon right now, and I'm going to switch over to daily charts. And a chart I'm going to show you in here is BABA. Now we're looking at, we're just going to look at this daily chart of Alibaba Group. And I want to tell you what a gap reverse is. First of all, you could see that this was a resistance area. So the stock has this big upside move, pretty decent upside momentum. It looks pretty good on the short term. It gaps up here and then reverses. Now, this is an engulfing pattern, but the key in here is that it gapped up and the sellers were waiting and it gave it all up and came back down. Well, there's actually a gap in here. It's an invisible gap because this was the close of the previous day. This is the open of the next day. So there's a gap in there that becomes invisible and then it comes down. And you can note that set the high in here. So that is a great pattern, whether you're a cycle analyst or any kind of an analyst, especially when it comes in a resistance zone, that some major top is in place when you get it at a top. You can see that. I'm going to show you some other examples of that. Take a look at Tesla in here, and you can see here in Tesla the gap reverse. It gaps way up over here. There's an invisible gap right in here, and then it actually engulfs that day right there, and now it's getting sold again. Well, Elon Musk, he came out and said the stock price is too high. Well, if it breaks under this level, it's going to give us a major sell, and we actually think that it's going to form something like a head and shoulders top in here. You can see that. But there's your gap reverse and the indication of a peak, and you can see how the stock is acting. Let's take a look at NVIDIA. I just want to give you a few examples in here of the gap reverse, NVDA. And you can see in here that there's your gap reverse right there. It gaps up that day, it engulfs, it reverses, and you can see the stock moving down. Even with rising momentum that we have in here, and supports in here pretty close, it did give you the indication that the stock was likely to move down. Even though it moved up the next day after that reverse, that didn't matter. It was declaring a level. It was declaring to you what the traders and investors were thinking. And you can see, and that's what the key is about the candlestick patterns, is they really give you a good sense for the psychology that's going on behind the market. So that is NVIDIA. You could see that. VRSN, you can see it right in here. This is a double gap reverse. You can see that. The first one here, the second one a little higher, and look at the stock moves down. It got a high of 219. It's now trading at 202. And a beautiful look at another gap reverse high where the stock continued to move down. Let's just take a look at Conagra, which is a gap reverse on the bottom. And you can see that in here, the stock in a downtrend. And then it ends up reversing and moving up. Now, I didn't talk much about volume, but a lot of these come on increasing volume when this happens. And in this case, volume was up near the high. It wasn't all that significant. But you can see gap reverse, gaps down, moves up, makes a major bottom, and moves up very significantly. A low of 23 to move up here to about 35, and a very, very good look at a gap reverse. That's what we look at, gap reversed or invisible gaps. They look pretty much the same. What's really interesting is that when I go into here, where does that come from? I mean, I actually taught this to our members, and you can see in here, just going to move this up a little bit so you can get a little better view of this. This is from our list of tools for techs videos, understanding and trading 4 different types of gaps. We have 80 plus videos in here that you can really get a good handle for so many aspects of trading in just the tools for techs. I'm just going to go back and show you the in the dashboard of the video library, and here you could see our askSlim Market Week archive, Future Speak from Wednesdays, our live we put in now our live askSlim live and special reports and market briefs, trader psychology, stock sectors, big picture analysis, style, strategy and plan, tools for techs. Just an amazing thing. A few IRA MO things in there. Over 500 videos in this library. I just showed you one piece from one of them. Can you imagine the kind of learning that you can do when you look at that kind of a library with 500 plus videos from me with the kind of experience, 45 years I've had? Man, did I work on creating all of that just to bring to you. You can actually have that by taking a level 2 trial membership. That includes everything in level 1. What are you going to get with that? Well, you're going to get our weekly weekly and daily stock index report. The daily one is phenomenal. It comes with a live stream, so it doesn't matter what platform you're on. You're going to see our charts on the S&P 500, the NASDAQ, and the Russell. People are raving about this. There are a lot of people that use it every single day. So you're going to get that, our daily stock index report live stream. You're going to get our weekly stock index report, our weekly ETF report, the Slimulator Momentum Tracker, one of the best apps you will ever see for investors or longer term holders. More than 1,000 symbols that you could see all of our momentum work in there, and 500 videos. Unbelievable, in 9 categories. Take this trial, $22.50 for a month. Can you believe that for all of that? Write Matt, M-A-T-T, at askSlim.com. He's gonna sign you up for $22.50 for all of this. If you want to take a quarterly trial, he has those for you also for incredibly low amount of money. Write Matt, M-A-T-T, at askSlim.com, and you're going to be able to get all of that, everything you saw right there. You'll be able to watch the whole video that I just showed you on gap reverse to look how to trade the other 3 kinds of gaps. It's really an extensive video, great information, and 500 other videos. Just incredible. Do sign up for that trial if you're not a member, and you will be just amazed at everything that's in there and the stuff that comes out every single day. There's nobody like us out there, and I really want you to get a feel for us and who we are. So 1 month, $22.50. How could you not do this if you're interested in the markets? That is our look at that educational piece, trader education, that I'm going to bring you now and then. Let me know if you like that. So now we're going to get into our short-term view for the coming week. We always like to be accountable to what we said. This was an easy week to be accountable to because we were better than 80% right looking at these markets. We rank ourselves by important levels, by the cyclical patterns, the analysis that we do, the support resistances, 3 or 4 different ways that we rank ourselves. And when we get 80%, we've been really, really good on that. Gold, dollar, the stock market, we were great on. Missed light crude by a little bit, right pattern, but it didn't quite move to the downside as much as we thought that it would. And then it moved up a little bit stronger than we thought that it would, so pretty right in there. And the bond market, we only get partial credit for, as we thought it would roll over and start to dip a little more. Well, it did roll over, but it didn't really start to dip that much. Let's take a look at what we see happening in the coming week. So I'm going to move from this ConAgra chart that's on here to look over to /CL. I'm going to take this out to a 2-year daily because it lines up a little bit better. And you can see in here what we're looking at. Do you see the cycle energetic rhythms when you look at this chart? If you don't, you're not looking, because we have it really laid out for you in here. And you can see the momentum. The slim ribbon is the best momentum indicator you'll ever see. And when the projection oscillator tells you it's time to sell because it's gotten overbought, you better believe that that's a high probability that it's going to have an impulse to the downside. You can see that right in here, and the big impulse to the downside, negative momentum, and that has not gone away despite the fact that it has started to move up. So what we see here for the coming week is a pretty good chance that it's going to make a little bit higher ground. I put numbers in here for you to see. The middle, that right over there, this is really the minor resistance in here off of this cycle using swing high, swing low analysis, $21.50 to about $25. $21.50 is probably about the best we'll see, because there's going to be a lot of fear about what June is going to look like as the market. If they still don't have anywhere to put oil, there's going to be another fear, at least, that it's going to go negative again. So we think it can dance around in here for a while, but then it'll probably get below these support areas over here and really get hit. Well, best case, we see it moving back down under that 15 level to maybe even 11.5. And in here somewhere we have it marked sell zone, and that's because we believe it is a short. Don't know exactly what could save it right now. Maybe some kind of news with a war or something like that, but we don't want to see that happen. So light crude, some of the evidence is really that it's bad. I mean, it's rebounding up in here. We could see it stalling at that 21.50-ish area. Long shot, low odds it gets to 25, and over the next 2 to 3 weeks, pretty high potential it gets below 15 again and maybe down below 12. It's a resistance area here, and we see that June risk that we're talking about. That is a look at light crude. This is GC /GC. Can you believe I give this all to you for free? Here is the look at the gold market. Now, in here you can see the cyclical patterns and how they line up. We revised this slightly to make it one click tighter in here, because that's how the market is trading. This is the gold in here. The silver is the dash line. The gold is the gold line in here. And they're kind of out of sync, but then they're coming into sync for an important low here in May. So we have believed that this market was going to be consolidating here into May. And then there's a period over here, and you see that silver outperform period. That's where we think that silver is going to start to make ground on this record silver-gold ratio that we have right now that got close to 120 at one point. So this is where we think silver might actually be an outperformer, but we're going to wait and see how that looks. In the meantime, we're going to say for the next, we'll say 2 to 3 weeks, it's really down into some part of the next week, then try to get up again. This is if gold is going to overperform, it would be in this rising phase right over here. So it's down a little bit here. It could get down to 1660 and then rally, and then probably one more time under that 1660 area in here. These are the supports from the weekly chart. Some of the evidence really says that we're in a period in here, we're in correction into late May, potentially early June. But then after that, something very different is going to happen as all the energies push up. So the question is, in my opinion, do you wait to buy it through this consolidation period, or do you start nibbling now? That's a decision you have to make. But the sum of the evidence says to me this is a modest corrective period in what overall is a very strong period that we've seen for the last year, and likely to be for maybe the next 6 months to a year after that. So this is just a resting period in here. I'll call that the sum of the evidence. The dollar DXY Big megaphone you can see forming, and they're actually coming down into a diamond as you have a reverse triangle forming. We thought the dollar would be moving down, and you can see it has. The fact that it got down back to that cycle support area is negative. It says that in the next couple of days, it probably makes a little bottom in here. It tries to rally over the next week or two, but then there's a lot of risk that comes in again. So you could see our projection in there. It's going to be hard for gold to avoid going up if this is actually the pattern that happens in the dollar. Now, they have had a little bit of a breakdown in their inverse linkage right now, but we'll see how that really comes. There are two cycles in here that are really both in play right now. Out of phase, the gray one or ghosted cycle is losing some effectiveness in here, but they both kind of bottom right in here. So we're just going to look for dip, rally, and then a risk of another move down over the coming period. Some of the evidence, by the way, momentum being lost in here, now down after having been up. So momentum in there looks very weak or becoming quite weak compared to where it was, but it is a very choppy period. When the ribbon is narrow, you trust the momentum signals less. When it starts to widen, you begin to get inertia in the market, and that inertia brings bigger impulses. We have this diamond forming in here. Some of the evidence is that there's a major top being formed, in my opinion. And as this range narrows out here, you're going to be coming out to some focal point. And my opinion is that then it breaks to the downside. If you look at our Future Speak video and you look at our analysis in the Aussie, the Canadian dollar, the British pound, and the yen, they're all very significant in this analysis. And they say to me the dollar's got problems. If that's the case, gold is going to be in good shape. So the bond market's been one we've struggled with a little bit in here because we're bearish. We thought it was going to roll over and go down. Well, it rolled over, but it didn't go down. The momentum is still strong in here. Here's where your momentum turned up, way over here. This is the slim ribbon right in here, and all of these buy or add confirmations that you see going on in here. There's actually another one right over here I didn't even list. So I don't know how you get much of a break. We've been upping our targets in here because it's using up the time. A couple weeks in here of risk potential, 175. That's really what we're looking for to happen in here. And then there's a potential it's going to be moving up again as the Fed does all of their nonsense times 2, times 10, times infinity. Who even knows? But they're going to try to keep these yields low and even lower. And based on what the economics look like going forward, they might actually go to negative. It could happen. They said that they wouldn't do it. Powell hates the thought of it. But Powell's doing everything he said he wouldn't do before. So you can't trust him. You can't trust the Fed. They're just out to do anything no matter what the cost is. And they'll probably hold this from falling very far. So my short position is I'm actually believing I'm just not going to get paid very much on it in here. And it is just showing tremendous strength when we look at that. We've extended the cycle down to maybe be for 2 weeks from now, 175. But all this bond buying is going to keep it from going very far to the downside. So that is a look at the first four. So now we're going to look at the stock market. We focus on the S&P 500 on the daily chart, which really is a pretty good representation of all of the indexes. We're going to do our analysis in here, and what we always do is we focus on support, resistance, momentum, and cyclical patterns, key levels. That's what we want to do. We really want to get a good handle on all of these aspects. We do some of the evidence analysis where we put together multiple time frames, and I think that's the only way you get a major good feel for the market. It is all about feel. It's about understanding what the energies are that push the market, and when there are times certain things could happen or should happen, we call that phasing. It's really windows of time that you create an expectation, and that's what we do when we do this type of analysis. So let's switch over from the bond market to the S&P 500. here is your major 35% break. Cycles in here were running about 20 days. That's this blue cycle right in here, the solid one. You can see 20 days over here, 20 days, 20 days. It then had a 16-day cycle because it was so oversold it couldn't wait to rebound in there. And then you get this dash cycle, which is really what formed. And you can see in here, it's really going back to that 19-20-day patterns in here. But now you see what happened. The momentum turned up and then it turned down from exactly the top of that resistance. We originally talked about the highest probability would be that it would get up to about 2730 area at some resistance right in over here. And then it did much better. So actually it was here about the 2780. That was the 50% level right there. And then it got much different because the length of the cycle only left 2 days to correct. You could see that, and then started to move up again. So that's why we said what we said. We said we are very bearish long term. We see that the intermediate had improved, and we see the short term was in a very bullish pattern. And that's what gave us this perfect projection in here. Now you can see there's a little bit of an island right in here. That island is formed by the upside gap right here and the downside gap right over here. At this level right over here at about 2740, 2750, that is the perfect spot for it to stop. Now we still have upside momentum. The supports from the weekly are here, 2775, down over here around 2670-ish, something like that. That's what we really see. That's where the downward target is over these next 2 weeks. With that, we think we're going to continue this downward erosion that we're having. We have talked about a decline into May, and that's where it targets right now. The breakdown over here, 2727 under this last low, that's a pretty key level. If you get under there fast, it's going to set up a potential free fall that's worse. If it gets there late in this pattern, then it's not as meaningful, and then you're likely to get some further rally in here. I said we're going to go to school on this rally in here, and we did, right? It told us where the resistance is, and now it's giving up all of this ground. S&P's down 88 points on the day as we talk about this, as the market is basically on its low. This ton of selling coming in, the NASDAQ finally giving some ground, but only giving up 250 points. Almost 300 points right now is about 3%. There's probably more risk than that in here, but finally the stocks, the handful of stocks that have led the market on the upside, well, they are starting to give ground. And well, like I said, I think Amazon made a top. I think Apple's making a top in here also. And these other FANG stocks, I think that they're going to succumb to some more severe selling. So we'll see if we can hold on to the positive momentum. This was a key level to reverse. Here's your upward momentum. The slim ribbon gives you support right in over here. That is the bottom of it, comes in at around 2790, we'll say. This is right over here around 2770. So we're going to look for it to come down into this area, 2790, 2770. And we'll see if we can get another rally again. Basically, we think that the range that we're looking at in here, 2950, 2770, is pretty reasonable over this time period right in here, where if it doesn't break under this level right here, that's 2727, then it's likely to come up and test these levels up again at 2940. If it breaks here, it's a lot different pattern, and even testing it reduces the upside projection. So we're going to say the next few weeks really look like they're to the downside in here. The date of this low, or the low range, is 519 to 526. And that's when we think that this cycle, this declining cycle, will end. So that means if you get some up days in here, they're sells. And you're likely to have a high probability that it's going to be moving down again. Some of the evidence, intermediate patterns are stronger. We're looking for a wide chop into June. And all of that is an upward correction in what we think is a major bear market that peaked up at that price right over here that you can see, 33.93, And that break to 2191 was simply the first wave of a long time of difficulties out there. The realities are coming into focus in here, that the market got way ahead of itself as far as this rebound. And you can see as we lose here 3%, 88 points, that's probably just the beginning of this moving back down in this upward corrective period and creating this range that we're expecting. I don't think we have a good market from here on, and I think that we have, well, it's not a good market, it's a bad market or a worse market. This is a top that really looks to me like it's formed. Let's look for these numbers in here for this week. 2790, 2770, and potentially down over here, 2670. That is a look at the stock market, the S&P 500, and just a ton of stuff that I had to show you today. I hope that you thought it was great information. Make sure you write it Matt at askSlim.com. He will send you all of these, the special for the workshop, the trial for level 2, and we have trials available for all of our levels that you're interested in. So you can write him and he will help you, give you a ton of information about what is in each of our membership levels, from investor type interest to trader type interest, really advanced skill type interest. There is something in there, I think, for everybody, and I share with you my 45 years as a trader and my fantastic team bringing you tons of stuff every single day. That's it. I want you to be extremely careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been